Good morning. This is Larry McMillan with the stock market update on Monday, January 30th, before the market opens. So we have the rather unique situation right now, although I have seen this before, where almost all of our indicators are on buy signals, and we also have a newly entered seasonal bullish pattern right now. But SPX, the main index, is not cooperating. It fell back again from the 4,100 level on Friday. The futures are down about 30 points this morning, so it's definitely having trouble at that level. And so overall, SPX is, the final arbiter here. Price wins out. And so unless SPX can close above 4,100, this bear market is still in place, despite, the positive seasonals that have driven it up to the heights that it is right now. So let's review the individual indicators. The equity-only put-call ratios are on buy signals. They're falling rapidly now, which means the buy signals are strong, and they came from a very oversold condition. So these normally are, indicated to be very strong buy signals. The breadth of the market has been tremendously strong, and our breadth oscillators are also on buy signals, and they're quite overbought, which means that the market is participating strongly in this latest rally, and so that's a positive sign as well. New highs versus new lows. New highs reached 117 on the New York Stock Exchange on Friday, and that's a pretty large level, and they're easily outnumbering new lows, so that indicator remains positive too. VIX probed down below 19, so that's a bit of a warning sign. The fact that VIX is in a downtrend, that's bullish for stocks, but the fact that VIX is this low in the last year, every time it's gotten down to this level, that's proved to be a problem for the stock market. So that's probably the only warning sign we have from our regular indicators at this time. I mentioned the seasonal factor. At the end of January, there's usually some pretty heavy institutional buying of the market, and so that in the past begins today, the 19th trading day of January, and continues for 4 days. So we'll see how that pattern develops. It has a good track record. I believe it has 29 wins and 8 losses in the last 37 years. So that's a strong indication, and it generally results in a positive move of about 1%. Nowadays, 1% doesn't mean much, but still, it's 40 points or so on the S&P. So add these things all together. Also, I should mention the construct of volatility derivatives is positive as well. So adding these all together, we have a very positive internal picture, but SPX has yet to confirm it, and it has not broken out over resistance, and therefore, technically, we're still in a trading range. Aggressive traders are probably selling the top of this trading range, which means that if we do break out over 4,100, there will not only be probably new buyers, but there'll be plenty of short covering as well. But unless that happens, this market can be considered a bearish market. The SPX can be considered a bearish chart. And so despite the fact that we are holding long positions in line with some of these indicators, we still are maintaining an out-of-the-money core bearish position. So I invite you to visit our website, check out some of the specials we're running right now, and you'll see our daily letters keep you up to date on all of these indicators. Meanwhile, have a great week trading.